Good morning. Thanks for having me on.
So do you crunch numbers 100 times a day, or are you getting just a blizzard of data, or how do you keep track of the numbers?
Well, I think we're on day 67 of the session, so we're running numbers really constantly in our office between it being filing season and then tax bills and then running fiscal notes on potential bill changes and amendments. We're off to the races. It's busy, but it's good. Kind of have that adrenaline rush with everything going on right now.
How do you think the session's going?
I think it's going pretty well. The legislators have a lot of difficult decisions ahead of them. They're cutting budgets, but of course, that all comes back to revenue. So the half of the equation when it comes to appropriations is the revenue side of things, and because of the decrease in revenues that we've seen, you've had to, especially in sales tax, which is the number one contributor to the general fund, you've had to see that decline in sales tax has led to cuts in education, higher education, and human services. Those two things, including K through 12, make up 70% of the general fund. With sales tax being the number one contributor to the general fund, and with that declining and where it's at now, you have to cut human services and education, and that's essentially the tough decisions that they're making in Bismarck right now and coming to resolution in conference committees.
I wanted to talk with you a little bit about the overall economic picture as we look at it from tax revenue. I have a very strong sense that we're in a spring-like mode from the standpoint of kind of a bounce back, if you will, from a couple of tough years. Do you sense that?
Well, the way I like to set that up is first give a historical perspective. We went through a huge economic expansion, say from 2008 through 2013, and just to give you some numbers, in 2007 the sales tax base, so the taxable sales in North Dakota was about $10 billion in 2007. That increased dramatically up to 2013 to $27 billion. So the fastest growing economy, the biggest growing tax base in the nation. Now, just from 2013 down to 2016, the most recent year, we've gone from 27 billion peak down to 17 billion. And what I like to call that is an economic reset. So essentially the economy is, we went through this peak and this valley, and now we're starting to plateau, and we're starting to see a bit of an uptick again. So like you said, there's a bit of a springtime activity going on. We've met forecasts this last month in sales tax. We've been reducing that amount, that forecast amount to meet what's coming in revenues. We've met that now this last month, and we're starting to see an increase in oil tax again too, which shows that. And as I'm watching the oil prices this morning, just over $53, around $53.50 in oil, we're starting to see that uptick. Completion of wells. We actually believe that based on February production, our tax numbers from February, that we should be over 1 million barrels a day again in oil production. So we should start to see those tax revenues flowing into the state going into the spring and summer months. And, good weather, even though price is in that low 50 mark, we went through a tough December as far as weather and oil production, and that really halted oil well completions, but we've bounced back strongly. And based on some rough numbers, Lynn Helms from Oil and Gas can confirm this later, but really, we believe that we're either at or close to or over 1 million barrels a day again because we had such a spike in our oil tax collections from February production that we collected in March. So between we hope that will soon trickle into the general fund as far as sales tax bump up in activity there too going into the summer months. So even though we've cut forecasts, we've cut back the level of general fund money that we depend on, there's some bright spots in the future too.